The research is this is the agency that we use that marries all three reports, the Equifax, Experian, and TransUnion. And so I'm using them because this is what I look at day in and day out. So and so on this first slide, you'll see open trade lines. And what I want to do is go through these. I know it may be exhausting, but I think it's best that I go through, because one of the things that I've learned that no matter which reports you look at, they're all pretty much going to be the same and have the same type of information. And so I just felt it necessary to do this in order to know that we did teach you, about what a credit report is and what we look at. And so on this first one, you'll see it's number 1, and that is, it says Capital One Best Buy. That's the creditor's name, and it's usually listed for each trade line. And then item number 2 is the account number. And this right here is the account number that we go off of. And number 3 will tell you what type of item it is. And so in this account, the description will be considered a credit card. It could easily be a line of credit. It could be an installment loan, a mortgage, an open account, or it could say paid in full, or it could be revolving credit. So those are some of the examples of what the type of codes there could be. And then in item 4, you see TU and XPN. Normally you'll, in other cases, you may see EXP. You see TransUnion, Experian, and then EQI is what I meant, Equifax. And so those are the credit bureaus that will show up in the repositories supplying the trade line information. So the only 2 that's supplying the information for this example are TransUnion and Experian. Okay, and so item number 5, you see the date of 1-08, and that's the actual last payment date. So if applicable, the last payment date will be indicated. And something that I like to bring out on here is, so if there is any derogatory information, which we'll see on a later example, it'll say last missed payment or late payment on there. And what I like to tell people when I see, if it's, let's just say you're buying a house right now, if we see a late payment on 3/20/22, I will say, okay, we need to kind of wait for at least 6 months before we revisit, because you don't want to have any late payments that close to when you're trying to purchase a home. So that's very important. And so the other item, let's go to item number 6. That is your payment pattern. You'll see CCCC. That is a real nice pattern, because that means that you are current or paid as agreed. In some cases, it'll have 30 to 59 past due date, and it'll say like a 01, or 02 if you're 60 to 89 days past due, or 03 if you're 90 to 119 days past due, or 04 if you're 120 plus days past due. You don't want to see anything 01, 02, 03, 04, because that's going to affect your overall credit profile. So, and then on line 7, item 7, you see bureau and mark codes. This is added detail about the account supplied by the creditor. In this case, which is positive for Experian, it reported the account was paid account 0 balance. This is an account in good standing. And then Experian says account paid satisfactorily. Those are wonderful words and wonderful things to see on the credit report from a lender's perspective. And then you see TransUnion said it's a closed account. And in most cases, what I try to explain to clients when they're working on their credit or building their credit, if you have long accounts that you may have had since 18, 19, 20, you've had them about 10 years, that's a positive. And if you want to pay them down, I always tell clients, do not ever close the account when you're trying to buy a home. You can pay them down to 0, but do not close them, because that will drop your score quicker than you have no clue. So I just try to encourage clients to leave the account open. They can close if they need to pay it down and pay it off, or pay it below the 30% usage. That's okay, but do not close it, because that has a larger effect on your overall credit score than than people would know. So if we go to line 8, item 8, that's the reported date. So they pull it looks like they pulled this credit report on the 8th of 2008, February 2008. Normally you have a date. And so that's that right there's a reported date. And then number 9, it's the date of the last activity, indicates the date of last activity on the account. So looks like they haven't really used the account since 2007, November 2007. And let me go back to 8. I misspoke. It indicates what that date indicates was when the trade line was actually reported to the bureaus. And then on you see up here open date, which that's when they actually opened the trade line on number 10. That's when it was established. That's when somebody ran your credit and opened that trade line. And one of the things when we speak of trade lines, you know, I've had clients who have no credit, believe it or not, but they also don't have a bunch of collections. So if you know, we have products that will help you get into a home if you have 0 credit, but you must have, in that case, you want to have at least a clean credit with no collections. You also would you want to have a lease, at least a year, and you want to have a bank account that's been open for more than 12 months. And in some cases, you can use let's just say you have a cell phone in your name and you have 12 months of payments on that. We can use that, but it must be in your name. It can't be in your mom's or your child's name. It has to be in your name. And then another thing we could look at also is a utility bill that you have in your name. And I've also done it where someone had a storage building in their name and had good payment history for 12 months. So all of this is just to say that we will work with you and help you get into a home. Just don't, because I learned the hard way coming from East Texas. I paid everything in cash. I was so afraid of having bad credit. My grandfather put the fear of God in me. And so college, I paid cash. Everything was paid for at the beginning of the semester. And I worked hard during the summers and paid and wrote a check. And so, but then my economics professor told me, pulled me aside my senior year, was it junior? One of them said, hey, you're going to Dallas and you're going to be starting your new life and you need to have some credit. And because it was some questionnaire and I had no credit. And so, you know, I opened up a credit card and I kept 0 balance. I would charge maybe, you know, $5 or $10, but I paid that puppy off so quick because I was so afraid of having debt. And I didn't know, I was young. So, you know, we all learn. And so I just wanted to bring that up while I was talking about trade lines.
Hey, Kip,
yes.
Marianne made a good point to express again, which is very important what you said about if you make one late payment, you have to wait 6 months to even think about making an application for a mortgage. And so, Marianne, you have any comments about that, or just want Kip to reiterate that?
Yes, actually, I thought I might have been wrong because that sounded so shocking. So I guess if I have 4 cards and I make, because this happens, 2 late payments in 1 month, right? Maybe even 3, then it could be a moment before I can get back in shape, right? To get back on the home ownership journey, but not to fret and not to worry, because that has happened to the average person. And we just need you to keep moving and stop charging. Thank you, Annie.
Well said, Marianne.
Well said. I like how you said that. Keep moving and stop charging.
Pack your lunches.
And so I think so on item 11, I'm gonna go back to these trade lines because guys, this is very important. I want to make sure we all know how to read an actual credit report, because somebody run your credit, you want to know what's on there. So 11 it's called Ecoa Code, which it indicates the relationship of the trade line to the borrower. So that normally is like whether it's an authorized user, if it's it'll say A. In this case, it says B. That means it's the actual borrower. Sometimes it'll say C, which will be co-borrower, or J, which is a joint collection. And then S will say it's like if you're a co-signer on a liability. I see a lot of that when someone co-signs for like a vehicle. And then T, if it's terminated, no further responsibility, or U, undesignated responsibility, not specific, or X, that person is deceased. So that's what that code means. And I know, just learning, a lot of people don't even realize what all that is. Number 12 is the balance. That indicates the amount of outstanding, what's outstanding on the account. In this case, is zero. They have a zero balance. And then on 12, it looks at, is that 12? On 13, it looks at their credit limit. They have a credit limit of $500. That means that they have a card, Capital One Best Buy card that has a credit limit of $500. And so they have zero balance at this time, which is a positive. And then on 14 is the payment. Well, if they don't have a balance, they don't have a payment. So of course, that's going to be zero. And normally on these, normally the payment is $25 on these type of cards, but sometimes it depends on the type of card, it'll be different type payments. And then number 15, that indicates high credit, the historical high credit balance of the account. They had gotten up to $443 that they were using in this account. And so one of the things that I like to say, so if they were at 443, they were above well above the 30% usage. They were at one point, they were at 88.6% usage of that credit card. And how I did that, I took that amount, the high amount of 443, and divided by the amount of their credit limit. And you always want to be at least 30% or less. So if I took 30% of 500, you want to be 150 or below, to maintain a good positive credit profile. If you have a balance of $500, credit limit of $500. And then the terms, number 16, it talks about the terms of repayment granted by the creditor. So in this case, the term is it's revolving. It's a revolving debt. That's what it looks like. And then 17, the current status, the current account status by the code. So 17 is 01. So that means that stage is that it's in a good condition based off of that. And then the account type, which is number 18, is the type of account or code, that's where the revolving comes from. I don't know why it says revolving, but that's what it is, revolving debt. Anytime you have a credit card, for the most part, guys, it's going to be revolving debt. Now, if you have a vehicle, that's considered installment debt. Or if you have a mortgage, it's a mortgage debt. And sometimes people get like, they obtain a HELOC or a line of credit against their homes, or just a line of credit in general. And it'll say credit line. So those are just what I mentioned that earlier, but I just want to bring that up again here. And then 19, it talks about the months reviewed, the total number of months the account has been reviewed. And on here is 4 months. And times past due, the number of late payments made on this account, as you can see, there was zero. There was 0 30 days, 0 60 days, and 0 90 days. And so now I want to go to a trade line that shows some derogatory trade lines. And I'm just going to point out some items, because we just went through 1 through 21 on that last one, but I just want to specifically point out some of the derogatory trade lines here, so you can see what we look at as a lender. So one of the first things I see is on line 5, item 5, the last payment due was 11/12. But then you see 6/16, and you go through and you see CCC, meaning they've been making their payments, and then a 1. That 1 means that it was at least 30 days late. And if we can correlate that to look up times past due, you see that 1 right here, which coincides with the 30 days late. And so that's what we're going to look at. We say, okay, well, they were doing really good, and then all of a sudden they had a hiccup. And, you know, 1 late pay, but then you got right back on the right train. So you got 1, 2, 3, 4, 5, 6 more months where you haven't had another late payment. So again, we are human, and we make some things happen. Life happens. And so just don't think that you're going to be penalized or punished because you had a hiccup, because we look at the overall credit profile. And we
Hey,
talk about—
Kip, before
Yes,
you
ma'am.
go on, you have a question. Lorena asked, so on the credit report, does the 30% count for total utilization for all credit cards if you have more than one of each individual card?
So it depends. I try to tell clients we do it individual card by individual card, mainly because, you know, if it may be more overwhelming to look at 10 cards and you have, because each card has a different credit limit. And so like here on this one, just use this as an example. You see the balance is 3,000 and the credit limit is 4,000. So if I take 3,000 divided by 4,000, this is going to tell me real quick that they are well above that 30% usage. And it's at 75% usage. So this is turn up their credit. And plus with that late payment, I mean, they're just struggling to maintain this credit card. Now it goes back again, Annie, as to why I would not choose to lump this card with the other positive one where there was 0 late pay, 0, you know, the other card, the example where there was no balance and $500 credit limit, because that's positive. Did that answer your question?
Lorena, you want to come in? Is that clear? Okay.
Yes,
Okay.
it answered my question. The reason I asked was because on my recent credit report, it was just one of the apps that I was looking at on my phone for my credit card that monitors it. And it basically it told me that my utilization was at 23%. And I knew it wasn't for that one particular card. So when I added all of the credit limits that I had together and then divided it, it gave me the 23%. And so I didn't know if that was something that lenders look at, if they looked at it, you know, as a whole or individual cards.
So
if you have,
yeah, in that case, it's told you 23% utilization. So it looks like they're looking at the overall. And so that's what that is on that case.
Okay.
So what I suggest is breaking it down further and looking at your individual cards and seeing what the utilization is.
Okay. Thank you.
You're welcome. And so you already know that they're above their 75% usage. So, and they have a payment of 101 and they're struggling. You know, you can see that they're struggling. They've had this card since open in 2006. So they've had this a long time. So, you know, they just right now, but they've got good payment history, then boom, all of a sudden a hiccup. And 1 late payment, and then it's been reviewed 99 months. So they've been watching this account and it's a revolving card. Like I told you, most credit cards are going to be revolving debt. And so those are the things that we look at when we're going through a credit and we see some derogatory trade lines.
I have a question. This is Anna. I'm not sure on how to work this, the phone to ask the question.
You're doing good.
Okay. I have a question. How far do they go back? Like you said, okay, everybody, I'm making good payments. But how far do they go back for a late payment?
Well, It depends on the type of late payment, if it's in collections or not. Most items stays on your credit for like 7 years. But again, they go through, and normally I've seen it where it's like 3 or 4 lines under, like where you see item 5, last past due, the credit history. So it can go far back as however they reported. That really is going to depend on the credit bureau. But I've seen some stay on the credit report for 7 years if you have a late pay.
Okay, my question is, when you're saying that if you have a late payment, 3 months before you go, let's say I got a late payment right now, and then I try to go and get a loan. So
Are you getting
like
a mortgage, or are you getting a car?
A
Okay.
mortgage.
So if you're trying to get a mortgage, we're going to look at your overall credit profile. But if you got one late payment, I'll tell someone real quick, let's not do a hard hit on your credit, because it may have impacted your credit score. So again, it really is going to depend on everyone credit situation is unique. And
Correct.
so that could be one item out of several that may be impacting your overall credit profile. So that's a very broad question to ask, but at the same token, if that's the only thing that's on your credit, then that's a whole different story. But if it's one of many, then we have to have a conversation.
What about the collections? If there's zero balance and you try to, I'm trying to fix a credit, right? I'm trying to, for mortgage. On the collections, once they have zero, and sometimes they still report it. So basically, does that hurt you?
No. So, okay, it really depends on the collection, because it'll show that collection, that item is taken care of. And most of the time, when it comes to items like that that's in collections, and this is something I was going to say too. Let's just say if it's a medical collection. I don't know if you are aware of this, but medical collections, they just sent something out saying as of July the 1st, 2022, all paid medical collections will be deleted from your credit report. And creditors have up to 1 year before they can report to the bureaus if you have a late payment going forward. And then starting in 2023, medical collections under $500 will not be reported. So it's really going to depend on what that collection is. And like, for instance, in some cases, if the credit has been, the collection has been pretty much forgiven or no longer being reported, we won't count that against you, depending on the type of product that you're using. So again, Anna, it really is an individual, one-on-one person kind of conversation. But yeah.
Hey, Kip, I think Jay had his hand raised. He had a question. Jay, do you still have a question?
Yes, ma'am. So Mr. Kim, I have a question. My question is, you was just explaining on the usage of the card, the utilization.
Yes,
so if you have no late payments, how far do you guys go back when you looking at the credit profile for a mortgage for the utilization?
Okay, so really that's a snapshot. When they pull your credit, that moment, that's a snapshot of where your credit is at that time. And so if your credit utilization at that time is under 30%, that's a good thing. But sometimes what happens, Jay, is a lot of people will have paid some things down, or they're ready, they're focused, they're driven, they've been doing everything that we've been asking them to do. And guess what? It hasn't been reported. They paid the item off in February and it's not showing up yet. And so they're hot as fire grease. And so what I try to explain to my clients, there are 4 reporting periods of the year. So after each quarter, for instance, what's coming up now, we're at the end of our 3rd quarter, March 31st. So the next reporting period will be April the 1st through April the 15th. So then April, May, June is the 2nd quarter. So July 1st through the 15th, that's the next reporting period. And then July, August, September, October, then November the 1st through 15th. October the 1st through the 15th, that's when the next reporting period is, based off the 3rd quarter. And then at December, the reporting period will be January the 1st through the 15th. And that's why I just try to tell people a lot, and a lot of stuff is being late and being updated on their credit reports. I don't know why, but it's just a lot of stuff is being late.
Yes, I
I'm not going to
noticed
blame
that.
COVID. I'm not going to blame COVID, but if it looks like COVID, it probably is because of COVID, and they may not have enough workers to do it. So
I noticed that exactly what you're speaking of now. Like I can make a payment like on Credit Karma, Expedient, whatever, they had a different apps now where you can look at your credit report and it shows like I might pay it last month, but it's still showing my utilization as what it was the month before. But I know that that's not accurate because, I'm looking at my actual account. So my question next is, with this cycle getting ready to close, it's probably in my best interest to go ahead and pay all my credit cards down to zero if I'm looking to purchase a house like in the next 3 months. So I don't take no chance.
It's totally up to you. I mean, cash is king in this world right now.
Mm-hmm.
So, but if you get it down to zero and you need it to not count against your debt to income, then go for it. If you have the ability to do that, but you have to be you got to be disciplined too. Don't use them. Hide those puppies, put them in a lockbox, and don't touch them.
Yes, sir.
So, but yeah, I hear you're doing the right things, Jay. And especially right now with the prices of houses going up and credits, everything just going crazy, put yourself in a better position. And it sounds like you're doing that.
Thank you.
Okay. So Annie, I pulled up the collection account. So Anna, this is going to help you based off of what some of the questions that you were just asking. And so when you see items in collection, you'll see the collection agency. That's the collection agency's name that is listed on each account number and tray line. It can be, it changes based off whoever the collection agency is. That's what that is. And then number 2, that's the account number. And number 3 is the original creditor. The original creditor in this case was Chase. The repository information is TransUnion, Experian, and then you see Equifax. All 3 of these repositories reported on this. Experian said account legally paid in full for less than the full balance. Experian says current account was delinquent 60 days past due. Account legally paid in full for less than full balance. It said it again. And then TransUnion says settled account. Equifax says settled account, paid account, zero balance. Each one will be saying the same thing, but in a different way of saying it. So, and then let's look at 6. The date reported, same thing. Everything indicates the date the trade line was reported to the bureaus. And the last activity, very similar to what we were talking about. I guess that's an 8R6, 610. And then open date when it was established, 2008 of April 2008. And then 9 is the code. It was just the borrower. It's not with a joint or someone else. And then 10, it shows a balance of 0 and the credit limit was 1,000. Payment of 1,000. And that's the type of account was Chase. When I was telling you earlier, if it's a credit card, most likely it's a revolving, and it's a revolving account. And then the current status, it says 9. And on the status code, which would be, if I look at my little handy dandy sheet, bad debt placed for collection. That's what that code says. And then on 17, it says months reviewed, 26 months. And so, this is what a collection would look like. But on this, we wouldn't count anything against you because there's no balance. It doesn't say open. So in some cases, if it says open and it has a balance, and if it doesn't have much information in the description, we're going to hit you for 5%. So if it's 2,000 balance and it shows open, that's 5% of that 2,000. We're going to hit that against your debt to income. So it is wise. What you were saying, Anna, is to try to get it paid to sell it. So what I encourage clients to do, if you know you want to buy a house, this is on your credit, you're not going to pay it, call the whoever owns this and tell them. Don't tell them you're trying to buy a house, because they'll have you by your toes. So don't tell them, don't give all your business away, but just say, hey, I want to settle this and I only have $300. And you start at a point where you can negotiate to where you're really comfortable. If 150 is where you want to be at, then that's just set as your goal. But you have to reach out to that creditor and say, this is what I need to do. I want to settle this. I don't want this on my credit. I'm working on my credit, and just be real about that, but don't tell them why.
Okay, thank you.
Okay.
Hey, Kip.
Marianne?
Yeah, you saw our Marianne Elkins had a question.
Yeah, Marianne?
Yes. Kip, when you started, you did say that you're gonna, your presentation is going to Annie and Marianne to distribute?
Yes, everything that I'm going through it will be sent to them. They can send it out. And this is being recorded as well.
Okay, thank you.
You're welcome. So that's what a collection looks like. And now this right here is one of the parts where I don't like seeing this, but you know what? Life happens. And this page right here is a public record. So a public record could be a bankruptcy, it could be a judgment, it could be several things. But in this case, we are looking at a bankruptcy. So a lot of people have questions about bankruptcies. And I always tell them, let me know, is it a chapter 7 or chapter 13? Because there are certain rules for one of them. And then I ask them, what is their discharge date? And do they have their letter saying it was discharged? Mainly because depending on the type of product, because you will have to go FHA. And what I do and do day in and day out on per my guidelines, you most likely will have to go FHA if you had a bankruptcy within the last 7 years and it's been discharged. But I've seen it in the case where someone has had their bankruptcy discharged and it's been over 4 or 5 years. Well, it's going to stay on your credit report for up to 7 years. And the judgment against you can be reported for 7 years or until the statute of limitations runs out, whichever is longer. So, just be mindful of that. But just because you have a bankruptcy don't discount saying that you won't be able to get a house. Because we will work with you. But being transparent is the key, because we're going to pull it on your credit report anyway when we pull it. And so there's a question on every application. When you fill out an application for a mortgage, it asks, have you had a bankruptcy in the last 7 years? Just be real. Yes, I have. And then, because it will show up and then you go through that. And so I just want to go over how this looks and how it reads. And so if you look at number 1, it speaks to the court, U.S. Bankruptcy Court in New York, Nevada, Las Vegas, Nevada. Okay. And that's who's handling that claim trade line. The plaintiff in this case it says Vegas, so I guess Las Vegas. And then the type, it's a chapter 7 bankruptcy. And it looks like it's been discharged. And then it looks like Experian and TransUnion and Equifax, all three reported it. And they reported as discharged chapter 7. TransUnion and Experian did, and as well as Equifax. Okay, the code is the new one. You see J. That means it was 2 people. It was joint. Whatever this was, it was a joint account that was part of the bankruptcy. And then on 8, the date of field, that's the date the action was filed with the court. So it was filed 10/13, but it was discharged 7/14. So if we were looking at that right now, that's 8 years ago. I'm like, okay, 8 years ago, let's move on. You can qualify for several other products because that's more than a 7-year period. Okay. And so the docket case number, in case you need that, if we need to just reach out, that's what that is. That says there, that number is a weird number. And that will be the docket of case number. And sometimes it'll have a disposition docket of case number. In this case, it doesn't have one. And then it normally shows the amount and the certificate number. But in this case, these does not show that. But I wanted to show this because a lot of people don't understand what we're looking at when we see what a bankruptcy is. Any questions? Are we good? No hands. Okay. And these are the codes that I use, and all this will be in that when we send it. So now I'm about to jump to another set of charts, slides that will go dive into, we're going to look at the credit scores. And this right here is a bunch of information, but I think it's very important for us to, just be aware and be able to see. And then I'm gonna send this out through Annie and Mary Ann for your benefit. This is just a lot of verbiage, but it's key. Again, that's why we're here today. Ever wonder how a lender decides whether to grant your credit? And so this talks about, what we look at, the things we look at. The higher the credit score is taken, mean that you are less of a risk, which in turn means you're more likely to get credit or insurance or pay less for it. So in some cases, a lot of clients are using down payment assistance programs like the T-Shacks or the TDHCAs or the SET or DHAP or Dallas UpCap. In some of these instances, these programs have their own built-in credit scores. I'm not credit scores, built-in interest rates. So as long as you got a 620, you're going to get the same interest rate as if you had a 750. It doesn't matter. So I have to explain that to people when they say, well, I got to get my credit this way so I can get a better, but I need down payment assistance. So that's something that you want to be mindful of as well. Right now, down payment assistance, I'm getting emails every day. We can't offer this program because the rates of this level and on and so forth. So we try to look at different options for clients to be able to get into a home that's the best product for them. And so this document will talk to you about your credit scoring system that creditors use to help them determine whether whether to give you credit. And this is something that I'll talk about, the credit profile. So it goes back to your bill payment history. You want to show good history paying bills. You want to show a good history of positive accounts. And if you do have collection accounts, like I said, life happens. Don't beat yourself up. And if it's a way you can go and try to solve those or resolve them, try it. All I can do is tell you no. And if they say no, get to a yes. And so this just talks about the credit scoring and something that we as a lender, we look at. I know someone has mentioned about Credit Karma, certain other free credit, FICO scores and things of that nature. Please know that it's a reason those items are free. They're free so everybody can get to it. And the thing about it is, I don't worry about the credit scores when you tell me what you have on Credit Karma. I smile and say, thank you so much. But let's take the score away, but let's look at what it's reporting. And that's why I tell folks, when you're trying to build your credit or do something for your credit or get something removed, Credit Karma and those items are a wonderful tool to have because it's not a hard hit on your credit. And so use those for that benefit for you to help you grow your credit. One thing that I am going to say to make sure I don't forget, you can go and get your free credit report once a year, and it's at annualcreditreport.com. You can do that, and sometimes people stagger do this by, they may get one from TransUnion the first quarter and get their free credit report from Equifax the second quarter and get TransUnion in the second or third quarter. So they stagger them. And then in the fourth quarter, they're like, okay, I know where I'm at. I got this, I know what I need to work at. But while they have the free annual credit report.com, you can see what's on there, and it's real because by FTC allowed us to and granted us opportunity to receive our free credit reports. Take advantage of that. That's a wonderful option for you. And so again, we've already talked about credit scores and things of that nature. I just want to read this. Your credit report is a key part of many credit scoring systems. That's why it's critical to make sure your credit report is accurate. Federal law gives you the right to get a free copy of your credit reports from each of the 3 national credit reporting agencies once every 12 months. So this right here, the annualcreditreport.com, or you can call if you don't want to request it online and obtain that as well. And so one of the things that is used in the credit reporting system and how it's developed model, a creditor or insurance company selects a random sample statistically to identify characteristics that relate to risk. So each of these characteristics then is assigned a weight based on how strong a predictor is of who would be a good risk. And so before we jumped on this call with everyone else, we were having this conversation in the background, and there's a lot that goes into this. And guys, and I tell you this just from years of working, looking at credit reports and things of that nature, you want to just keep an eye on your credit. I think it's good for you. I used to look at my credit, once a week, but I'm much better now. But it's just good to be on, because some things may get reported on your credit that you have no clue about. My credit one time dropped 100 points, and I'm like, where did that come from? So I called and I wore the credit bureaus out, and they told me what happened. And when I got I figured it all out and told them, nope, that's a mistake. And I sent documentation showing that they made a mistake. My credit went up 150 points. So, it's in your best interest to watch that, just like you watch your health and everything else. You want to look at your credit health as well. And so these are some of the tools that I'm giving you to help you be able to do that. To help improve your scores.
Kip, you have a couple of questions in the chat.
Awesome.
Hey, Tony asked which FICO score is normally used, 8, 2, 3, or 9. If you need her to clarify this, we can have her ask.
Yeah, we have a different measuring system. We look at the 3 credit bureaus, Equifax, TransUnion, and Experian. And in some places, I'm learning that they're averaging the scores, and I think we do that on some specific products, or we just may look at one score depending on that product. I know for our medical professions, we look at the TransUnion score, and in some cases, we take the middle of the 3 scores. So if you have a 680, a 650, and a 600, we use the 650 to determine your, how to move forward for your program.
I think what I'm really asking is which model is used, because I know that there are different FICO models. So if I look at my Experian report, it'll have a FICO 8 for home. It may have a FICO 2 for bank cards or credit cards or auto.
Right.
So
I was just about to say, Tony, it's based off of probably if you're looking at the scoring, if you're buying a house, if you're buying a home, a vehicle, or if you're just getting a loan, like a personal loan, that's where that all comes into play on that side, on the retail side. Now, when it comes to us as a mortgage, that's what I do day in and day out. We're looking at a different model. And like some of the models are based on more than just information on your credit report. For instance, when you're applying for a mortgage loan, the system may consider the amount of your down payment, your total debt, and your income, among other things. So it just really depends on what you're actually looking at.
Okay.
Okay, and Charlie had a question about, they say, so you're saying a person with a 620 can get the same interest rate as a person with a 750?
That depends on if the down payment assistance program. It just really depends. Now, TDHCA is 620 or better. Now, but if you do TSHAT, it's 620 to 639. You're going to pay a little extra because you're not at 640. So again, it really depends on the program that you're trying to qualify for.
And Marianne had a question. What if a client has a lease violation that popped up on the credit report suddenly with an amount owed and that was never notified? Should that client dispute?
They should dispute that real quick, especially if they didn't know anything about it. And just if they are trying to buy a house, let the lender know immediately that, hey, I didn't know anything about this. I would dispute it. And we're going to put this on hold until we get this resolved.
Thank you. And we have a couple of participants that raised their hands. Let me get to some names here. Well, I don't see them. Maybe they put them down.
Oh, it was me. It was Jay.
Okay.
Okay. So, Mr. Dixon, I have another question. So my question is, like, how do you get from being risky? Like, you make your payments on time. Is it because you can have a lot of hard inquiries or what?
Yes. That's a beautiful question. And so one of the things that I tell all my clients when they come to me, I'm not running your credit as a hard hit at the beginning. They're like, why? I said, no. The reason being because if a lender looks at your file and sees that you've gone all over town to have your credit ran. Now, people tell you if you do it within 45 days while you're shopping for a mortgage, it's okay. Yeah. But the other opposite of that people don't tell you is that the lender's going to look and say, okay, why did all these other people deny them? Why were they shopping? What's the real reason? You can say you shopping, but that underwriter may look at it, well, I can see why nobody else approved them. So, that's a risk that you take. And so what I do, I don't run your credit as a hard hit because something will pop up that I can tell you right then and there, these are the things that you need to work on. Now, I hope you stay with me, but most likely, if I do my job and provide the level of service at the beginning, you will stay with me. But in some cases, people they don't hear what they want to hear and they go around, they still keep shopping. And keep told, go to this lender, that lender. And it's a small world, folks. A lot of us work together. We send clients to, this bank or that broker because we are doing everything we can, especially in my little pool that I swim in. We want you in a home. We don't want you not to have a house. So if you're not going to do it with me, I may send you over to my friend Loretta, who can do what she can do to get you, because she may have a better program. And so, I try to, I give folks that information because they're listening to so many people and hearing just some of the wrong information. And so I encourage you to find someone who will not run your credit a million times. I had a client who came to me, had their one lender had ran their credit 3 different times. And I still could not understand why they had to run it 3 times. And so, and I knew that was going to be a problem. So I had them do a letter of explanation and we kept it moving. They got in their house. But those are the things that you want to be careful about.
Okay, Kip and Anna, and then Lorena, they had their hands up. So ladies,
Okay.
If you still have a question, you can go ahead. Anna, are you still there? Okay, Lorena, you want to ask your question?
Yes. My question is in regards to when you have things that are on your credit as a charge off, and maybe this had already been discussed, but with charge offs, say for instance, it's a voluntary repo or just a repo period, regardless, voluntary or involuntary, and it's on your credit, but it's on there as a charge off. And I mean, it's just sitting there. It says a charge off. It has a date that it was charged off, and it's just sitting there and it's ugly.
Well, let me share some good news with you, Lauren. And at the beginning of this year, we had a message we got from Fannie Mae. That's who Fannie Mae and Freddie Mac, they're the big people that, you know, we run our AUS underwriting, automated underwriting services through Fannie Mae or Freddie Mac. And so if you have a charge off, and like if I'm doing a FHA, that charge off is no longer counted against you. So like today, when I ran someone's credit, they had like 3 or 4 charge-offs. They had some other items. And I when I did my analysis and wrote it out to them, I said, this right here doesn't count against you. It's considered a charge-off. So we're not going to worry about that. But this right here, 2,100, well, I'm gonna have to hit you for 5%. And down here, where this is over 2,000, I'm gonna have to hit you for another 5% on that. And so, you know, charge-offs right now, as of now, which was reported at the, and a lot of people don't know this, but you can, it doesn't count against you. And you did say something about a repo, but if it says charge off on there, it doesn't matter. It doesn't count against you.
Okay.
Okay.
Thank you.
And Jay, I think, was your hand still up? Okay.
Yes,
You can go ahead.
okay. So, Mr. Dixon, my question was, Miss Anna was asking about the lease violation, because I had spoke to her about it when she called me about the Zoom meeting today. So my question is, like, I never received a bill about what I owed the apartments. It wasn't an eviction or nothing. I had gave them proper notice that I was leaving or whatever, that I was moving out, but they never mailed me my final bill. So when I seen it on there, I contacted the creditor, the collection agent. We had words, and really I didn't get nothing resolved. So I mailed off a dispute letter. I disputed it online and everything, and it came back like it was valid. So he mailed me all the paperwork that they had mailed him. But the reasoning, I'm not saying that I don't owe that balance. What I'm saying is I never got the opportunity to pay. So you can't put nothing on my credit that I never knew that I owe. You give me an opportunity to pay it. So I have copies where I had, because I keep everything. So I had kept copies where I had sent to the apartment saying, hey, this is my 90-day notice. Here go my forward and address, blah, 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 whatever. So he mailed me the papers. I basically been going back and forth trying to dispute it. I even called and said, well, hey, let's work out something. Let me just pay it, because it's like $2,100, like you were saying, with me trying to get my house. Well, I'm claiming I'm going to get my house in June, okay? So
this is a case where you're going back and forth and it's just not going anywhere. Contact the FTC. Yeah, contact the Federal Trade Commission. And
yes, I just mailed a letter. Wait, who's the Trade Commission? Because I just mailed it. Okay, let me write that down.
It's in here somewhere. I got it. It's consumerftc.gov.
Okay.
And you can go online and there'll be a place where you can get, or it may give you a chance to call someone and share what you're going through. This is something that's been great that I know a lot of people are not for it, but it helps people like you in this certain situation where you've done everything that you can do and you've shown them proof, and they're not being kind. So you may have to get them to get somebody to be kind to them.
Okay.
But yes, name and claim that, because you did everything right and you got the documentation, and and if you have a history of paying your stuff on time, and this is something that people don't realize, that's why we look at your overall credit profile. So you have a history. Wait a minute, this person paid and paid and paid, has a good credit history. Then all of a sudden this pops up. It doesn't ring true. So what you're saying is true, that you have a history of paying all your stuff on time, and you did everything you're supposed to do, but you still got to follow the process and get that done. And any underwriter will look at you and say, this person has a history of paying all their bills on time. There's no, and even at the apartment complex, because they got to do a verification of rent.
And can you give me the name of the people to contact one more time? I had to get a pen.
You can go to consumerftc.gov.
Okay, consumer.
dot F as in Frank, T as in
Okay.
Todd, C as in cafeteria,
Okay.
gov, G-O-V.
Okay. GLV. Thank you.
Okay.
Okay, Kip, we have a couple more hands raised. Someone that's on the iPhone, I don't see a name associated, they can go, and then Anna raised her hand again.
Okay, after these two, Anna and Annie, can we just keep going? Because
Mhm.
there's more information I want to get covered before we call it a night.
Okay, all right, who's on the iPhone? Do you have a question?
Hello. I was just gonna ask while we were at credit scores, does student loans affect that's really mostly all that I have on there. Like 3 student loans. Do they have an impact on trying to buy a home?
Okay, so with student loans, the great thing about student loans is if you've been making your payments or if you have them in deferment or, you know, it just, that is a, believe it or not, that's a loaded question. So I'm gonna tackle it in 3 different ways. One, if you've made payments and, you know, it doesn't matter if it's 100,000, if you've been making your payments on them, you know, it counts towards your debt to income. It is what it is if you've been making payments. Number 2, if you are not making payments, but they're deferred, and if they're in a COVID deferment, and if you're trying to purchase a house using conventional loan guidance, like a conventional loan, we won't count normally it's 1% of the total amount that we count towards your debt to income. But if it's in COVID forbearance, or if it's in an income-driven repayment program, we will not count that against your balance. However, if you have to go FHA, it doesn't matter. We're going to hit it for 0.5% of the overall balance. And that will go against and charge towards your debt to income. So the other thing is, if you have any student loans in collection, they most likely are in default. So you want to check and make sure that they are not in default, because you cannot get an FHA loan. So you want to work on that and get those out of default as soon as possible. Now, if you can go conventional, then you're in a better spot. Again, I can only speak to what we do at my organization. Other banks, other brokers, they may have different overlays and other options for you. I hope that answers your question.
Yes, thank you.
Okay. All right, Annie, I see no other questions.
Yep, you can move forward.
Okay. So I left this up here because I knew it was going to bring a lot of questions about how to improve your score. And I just want to reiterate again, making sure your overall bills are paid on time, that you're not maxed out. That max out meaning you're not over the 30% usage. Some of my realtors tell their clients, I don't want you 20% usage. So just to make sure. And then how long have you had credit? It goes back to what I said earlier. You want to have good credit. And sometimes insufficient credit history may affect your credit score negatively. But the only thing on that is it just really depends, because I've done loans where people didn't have credit, but they didn't have collections. So again, it just really depends on the individual. Everyone is unique. And then, have you applied for new credit lately? And this is something I do want to bring up. If you're trying to buy a house, you know, please don't buy a car beforehand. If you've been working on your credit and you got it just where you want to be, and I see this time and time and time again, someone will go buy a car for $800 a month. And then they can't buy a house at that point because their money won't make it. And because they're paying 40% of their overall income towards a vehicle. So I encourage folks, if you're going to buy a car, you need a car, buy you a cash car if you can, until you get into your house, and then go do what you need to do. But don't do the car before the house. And so, you know, that's something I try to encourage folks to, that credit, all of a sudden I see Zales, I see Alaska Furniture Mart. I see all these inquiries. And the thing about all these inquiries is that it doesn't, it kind of affects you when it comes to your overall credit profile, and it will drag your score down. And so just be mindful of that. And then on the credit accounts, do you have, and what kinds of accounts are they? This is something I was want to bring out. It's a positive, but too many credit accounts may have a negative effect. I did ran a credit today. I had their credit right where I needed to be. In 2 months, because they've been looking and looking and looking, they went and charged up the accounts. And so, and I told them, whatever you do not use these cards. We're right where we need to be. And once it changes, I got to take that letter back because you're no longer approved for that amount. And so that's what I'm having to do right now. So, again, those are just some of the factors that, ways that we want to be able to improve our credit scores. And so, again, I have this because I'm gonna send this to y'all, but look at this. And it talks about our credit scoring systems reliable. Yeah. And just know that we look at something totally different as a mortgage company than someone if you're trying to buy a car, so it's different. And then it asks if you're denied credit, insurance, or don't get the terms that I want. If you're denied credit, the ECOA requires that the creditor give you notice with specific reasons. This calls like for an adverse. Your application was rejected, or news that you have a right to learn the reasons if you ask within 60 days. And so you have that right. I want to make sure that everyone on this call knew what their rights were. And, if you've been denied credit, ask the credit insurance company if a credit scoring system was used. And if it was, ask what characteristics or factors, because, each company, each location, they do things different, believe it or not. And it's okay to ask that question. And so here's the FTC number. Again, I'm going to send all Annie and Marianne, they're going to send this to everybody, but this number here is good for you to, check and see if you need help. And going back to my iPhone buddy, this is a good number to help you, especially with the problems that you're having with the item being reported about the apartment. This is a 1-800-877 number that you can use, okay? And then if you want to file a complaint, this will tell you the video, give you a video how you can do that. And we're done with that section. And now the fun part, what do we really want to be here for? Fixing your credit. And so this is going to be the last portion I go through, guys, because I just think it's a real important section. And again, it brings us to basically everything that we've talked about. It gets us to this part. What makes my credit good or bad? Whether you pay, again, it's a lot of same things, but we're just reiterating because we want you to drive the point home. Do you pay your bills on time? What loans and credit cards do you have, and what do you owe on them? Are they pretty much over the max? Are you maxed out on them? And have you been sued, arrested, or have a file for bankruptcy? Those things are very important to know, and because how it's going to affect your overall credit profile. And again, my iPhone buddy, what happens if there's a negative information in my credit report? And so these are things that you can do that we talked about. Because sometimes credit bureaus, they sell information in your credit report to creditors, employers, insurers, or businesses. They use it to make decisions about you. And if there's a lot of negative information in your report, you could have trouble getting a loan or might have to pay more in interest. You could also be turned down for your job or insurance or some services. And so one of the things that I like to tell people that are shopping for insurance, homeowners insurance. So Joe and Louise has a better credit score, and people don't realize this. So I always say, okay, Louise, I'm gonna put your name first when you request the credit, when you request your insurance quote, because you're gonna get a better quote because your credit score is better than Joe's. Sometimes it's opposite, and people don't understand, like, why would you do that? I'm like, because I want you to get the best rate possible. And so believe it or not, that does affect it. And yes, you can get the negative stuff removed from your credit report. Now, remember I was saying most of the information will stay on your report for 7 years. It's legit. And bankruptcies will normally stay 10 years, but if they're discharged for after so long, then it is what it is. It can be on your credit report, but it won't, as long as it's discharged. Now, unpaid judgments against you, they will stay on your report for 7 years or until the statute of limitation runs out, whichever is longer. Now, there are some exceptions in certain situations, like when you seek a job paying for more than $75,000 a year, or a loan or insurance valued at more than $150,000, a credit bureau will include older negative information on your report that wouldn't show up otherwise. And I want y'all to be aware of that, because people don't know. And again, the annual credit report, we talked about what you can do to find out what's in your credit report. And then what happens if a company takes negative action against me because of something in my credit report? So that talks about the adverse action against you, and then you're entitled to another free report each year if you're unemployed. So this goes back to, I remember I said you can get one free credit report. So in case this happens, if you ask it within 60 days of getting notified of an action, you're entitled to another free report if you have something, if you're denied for any reason. And then you're entitled to another free report each year if you're unemployed and plan to look for a job within 60 days, you're on welfare, or your report is inaccurate because of fraud, including identity theft. So, and then here's the information for identitytheft.gov. Because lately I've had a lot of clients that freeze their credit reports. And when I go run their credit, I get it's clear as all day. And I say, why is it clear? Oh, I froze it. So you want to tell the lender, if, hey, I froze my credit, I need to unfreeze it. And, because you want to leave it unfroze while they're working on your file, because some things don't report. And then I had a client who I pleaded with. I said, make sure you unfreeze your report, unfreeze it. He unfroze two agencies, but he knew it was some on that other agency. And I said, okay, we're going to get the clear to close. I've asked you repeatedly. Now the underwriter said, we have to have it unfroze. So he unfroze it, and I saved the file because I let the underwriter know ahead of time that it's something showing up, I can't get to it, and it's still frozen. And the borrower was not transparent with me. And he was transparent when he had to be, but thank God I let the underwriter know, and then we did everything we could and helped them get into the home. But you want to be transparent about things, because we're going to see it regardless. And especially with your lender, your loan officer, which same person, be transparent with them. They're here to help you, not to hurt you. So, if there's any inaccuracies, let us help you to try to get it cleaned up and point you in the right direction. So if there is a mistake on your credit report, you can dispute mistakes or outdated items on your credit report for free. And you can either log into the credit bureaus, Experian.com, Equifax.com, or org, or whatever it is, and then it's a TransUnion, and you can do it online. In some cases, and in this package, you're going to see it's an example of a sheet you can use to do it as well, if you want to do it, dispute it by writing a letter. I have a sample letter at the back of this, and you can do it that way as well. But online, to me, is quicker, and you can watch it quicker. I just think it's just really good if you want to do it online. But one thing you do need to know, you need to have those disputes cleared up before you have a mortgage application ran, because again, you're going to have it cleared up. Anna, I see your hand up. Are you on mute, Anna? And so, in these sample letters, this talks about things that you can do. You can send a letter to the business that provided the information, and they have to respond to you within 30 days. unless they reasonably determine that your dispute is frivolous. So again, I'm giving you the tools in your toolbox to be able to help you to, take care of some items that may want to dispute. And if there is a mistake, they will fix that. And I'm hoping, my friend, that they realize that they made a mistake and they can go in and change or delete. The credit bureau they can go in there, they'll conference you, do a conference call with you, verify your information. And a lot of times the credit bureau, whoever it is, I know, like with informative research, I do a lot of conference calls with clients that items that have been taken care of, it just hadn't reported. And we send them the documents showing it's been resolved, and with the account number and the information, and we show how it was resolved, and that's what we do. And sometimes in getting some mistakes corrected. And then what can I do if the investigation doesn't find there's a mistake? Then that's something you'll probably have to pay for a credit bureau to do. Now, a lot of people, and these are some of the samples of forms, Experian, and so forth. A lot of people go to credit repair companies. And this is where I want to speak to something that we just did for a bank, Corp South, Cadence Bank, and that I'm beyond honored and proud to say I'm part of. We created, we have Operation Hope Specialists. And we have in Houston, because I know I have some Houston folks that are on here. We have Sandy Clark, who sits in one of our offices there. And she's the one who I've already sent her several clients who, and this is a service that we offer. You don't have to go to a credit repair and pay God knows how much money and still be in the same position. And I'm not going to talk negative about anyone. That's just not why I'm here, but I can only speak positive about what I know we have and we had to offer. And I know Sandy has been doing great work. So we have her, and if you work with me, then I can get you in contact with her, and she can work with you and helping you prepare you to become a homeowner. Now, she's out of Houston. Now, we have a young man who's starting soon, and I'm gonna go ahead and say his name, but because he's in training, and it's Oscar Torres. He's gonna sit in our new office, that branch that we're opening off of Keys Boulevard. We're currently there right now in a shopping center as we prepare to break ground and build a building. We want to be there because we want to help our clients, and it's important. So I can't wait for Oscar to join us, and then he'll be able to take on my clients that need help here, and he's bilingual. And like I said, it's part of Operation Hope that we're funding, and there's no charge or no cost to any of our clients. And Annie and Marianne, I know this is making you smile, because this is another tool to help y'all as well and your clients. And it's going to be no charge. So I say that to say, we want you to work with us, because we don't want you to go spend your money, because like I said earlier, cash is king, to go pay someone to do credit repair for you. In many cases, a lot of stuff you can do on your own. And like a lot of clients, I've coached them and got it done, and we've been able to get things done on our own. And a lot of this, it comes to timing. A lot of times it doesn't take long to get into the situation, but it takes a whole lot of time to get out of it. So you just got to be patient. And so that's what I'm going to say about that on the credit repair. And I'm just not, like I said, I don't believe in talking bad about any companies, but you will have information in the packet that will discuss that. And here's the letter that we spoke of that you want, if you want to dispute. Again, this will come to you. And that's that. And I'm going to go back to my original page, and then we're going to answer some questions. Annie?
All right, thanks, Kip. That was a lot of good information, and we appreciate you taking your time and sharing that with us. Do we have any other follow-up questions? I don't think there's anything in the chat, but I think I saw a couple of hands raise up. So Anna, I think you may have been having some audio problems. Are you there? Can you hear
Yes,
us?
I am. Yes, I am. Hello?
Okay. Yeah,
Hi,
we got
Anna.
you. Okay, go for it.
I'm not good with this. Question, if you owe the IRS, do you have to pay the IRS? I want to get a mortgage, a loan, but I owe the IRS. Does that count against me?
It doesn't count against you. It just really depends on what you owe. You may, if you have a payment plan, I always tell clients to get on a payment plan. Now it will count against your debt to income and affect how much you can borrow. So I always just encourage clients to get on a payment plan if they can't pay it all at once, but it will not deter you from being able to get a mortgage.
Is okay. So that's
It
like the
shouldn't. It
5%.
shouldn't, but like I said, it kind of depends on what it is, but it should not deter you from getting a mortgage.
Okay. Thank you so much for answering.
Okay.
Appreciate it.
Okay, I think Marion Elkins had a question.
Yes, my question is with FHA, Freddie Mac, or a conventional loan, if you are certain age, will you have to do the disability income?
Let me rephrase this and make sure I'm on the right page. You're
Mhm.
asking if you're using a FHA,
Mhm,
whether it's Freddie Mac or Fannie Mae,
mhm.
and then you said something about conventional, and you're
Even
saying,
if you have, yes.
and do you have to use your disability income?
No.
Is that am I correct? in
No,
it?
do you have to have a disability? Like, for instance, if you're 66 and you purchase a home, will those entities have you to have a disability income just in case something happens?
No. I can only speak to me and how I do it and what I've done. That you can report disability if you need that income to qualify. That's up to you.
No, not on disability. I'm saying, okay, when you get a certain age, it seems like you're not going to live forever, which we know we're not.
That's discrimination, ma'am. And so
Okay.
nobody can discriminate you because of your age. So let's just nip that in the bud right here and there. So
Okay.
when it comes to that, no one can make you get on disability. It's called the ability to repay. And it's up to you to report what you want to use to be qualified to purchase a loan. It doesn't matter your age or your gender, your sex, that's all discrimination. And so.
Okay. Let me clarify. I'm not stating if you're on disability. I was told once before, if you of a certain age and you try to buy a home, most mortgages are more than more than 15 years. So like 30 years and more. So would you have to have something to cover that just in case you expire?
Ma'am, you can be 25 and buy a house and expire the next day. So
right.
With that being said, again, I don't know. I would never tell someone that. I've never heard that. This is all that what you're just saying is I've never heard that. But at the end of the day, it's still discrimination. Number two is if you can show the ability to repay for 3 years, it's they for instance, so this is what we look at if you have let's say child support. So if that child is 12 or 13 and you're going to be paying and you got a history of paying child support, then we can use that income. Well, if the child is 17 and graduates at 18, we can't use that income. So it's called ATR, ability to repay. And then with that being said, we look at, whatever you present to us as income. And we take it on a case-by-case basis.
Okay, thank you.
Yes, ma'am.
Okay, I don't see any other hands raised. or any questions in the chat. Does anyone have any last questions for Kip?
Yes, Mr. Kim, I have a question. So do your organization only approve single family homes, or can you get approved for multi-family homes?
We do multifamily, we do duplexes. So my multifamily group, that will be our retail group. That's who I will have to do that. That's our commercial side of the house. But when it comes to single family, we will do a condo, a townhome, we would do a duplex, triplex. I mean, so, you know, we will be able to do that on the mortgage side.
Yeah, because if it's less than four or less, it's consider residential.
Yes, ma'am.
So that'll be on your side, right?
Yes,
Not
ma'am.
commercial. Okay,
Yes,
I just want to make sure.
Yes, ma'am. And it's really good if you already got tenants in there, like really, really good.
So with your organization, one have to be vacant for the owner, right?
Say that again.
So with your organization, if you get like a multi-property with 3 units or 4 units,
We
if
would
you
assume
have
that you're going to be the prime. You're going to be taking one as your primary.
exactly,
Yes, ma'am.
exactly. That's what I'm asking. Okay, yes, sir. That's
If
what I
not,
was
we can do it as an investment property. You put 20%.
No, I don't have no 70% to give you.
It's 20%, 20%.
Oh, well, that's still too much.
And a better rate at 25%. So just saying.
Hey, Kip, I don't see any other questions in chat, and
Okay.
no one's raised their hands, but thank you, sir. I appreciate you. This has been so informative, and it's always more information that everyone can learn. You can never know too much. And so with credit reports, and it can be confusing, but you definitely helped us know a little bit more about credit reports. So thank you. Marianne, you have any closing comments?
No, I just made a comment on our chat box, but just to thank Kip for everything. Excellent job. And I see we had some great participants, and I'm hoping that those of you who do not know us can come and meet us. We'd love to help you. Thank you.
Yeah, so everybody take note of Kip's contact information there. But if you did provide us your email address, if you're not a current client, if you are a current client of South Ferris, we have your information. We would definitely share the presentation with you. So thank you, everyone. That is it.
Yeah, thanks everyone. This is Marianne. Thank you, board chair. Thank you so much, Kip. This should be a high school class. You know, it's really, help people not get in trouble. So, or a college class. But thank you so much. It's been